So Fitch just downgraded US credit rating. So why does it matter? So let's look into it. So United States is considered one of the highly secured investment. In a way, what is a credit rating? Credit rating is a measure of credit worthiness of US federal government to handle its finances, to pay its debt on time. So literally, we're talking about financial health of United States. And the reason why Fitch downgraded U.S. credit worthiness, they gave a couple of reasons. One, growing federal debt, and second, they gave erosion of governance. Again, I was looking into the response from White House. They actually disagreed with the decision. In fact, Janet Yellen, she responded that this downgrade was outdated and it was not taking the most recent data. She was claiming that this was happening because they took data from 2018, 19. I don't know. What do you guys think? Is Janet Yellen is telling truth, or she's just trying to cover her mistakes? Let's talk about the impact, right? So again, this downgrade, first of all, I feel like this may have a short-term impact. It may not have a very long-term impact. Fitch downgrade may impact investors' trust, as I said earlier, U.S. ability to pay back its debt. So what will happen? Bond yield may rise. Investors may reduce their exposure to treasuries. Lower credit rating can raise interest rates on treasury bonds, which in turn can push the rates for everything like mortgages, your corporate bonds. So everything can get costlier going forward because of this. You already have seen there was a sell off in the market yesterday, and you may see that higher volatility going forward. I don't know how long it will stay, but I see that there's gonna be rise in volatility in coming weeks, months. There is going to be a psychological impact as well. Today, dollar is treated as a reserve currency for the trades across the globe, right? There may have some psychological impact, but I don't think it's going to be that big of an impact. Dollar will still stay as a reserve currency, but these things we have to make sure that doesn't happen again. So there are three agencies right now. Fitch, right, which already downgraded from AAA to AA plus. As Standard and Poor, I believe they downgraded U.S. credit rating back in 2011 from AAA to AA plus, and they have not upgraded yet. The only agency that is still rating United States credit worthiness to AAA is Moody's. So I don't know how long they're gonna stay there. Like if they also goes to AA plus, it's gonna have some little bit more impact on how things are. But for now, they are sticking with AAA rating. So let's dig deeper into a little bit more on what kind of impact we may be seeing and what I think about it. Higher borrowing cost. As I said earlier, this downgrade can lead higher interest rates on US government bonds and other debt instruments. See, investors are going to perceive this as a risk, and they want they want higher yields on their investments. So that could result in, like, again, increased borrowing cost for these for the government, right, when they are issuing these debts, right. Second, weaken investor confidence because of very high credit worthiness of United States. There are a lot of investors, locally and from international. They invest in United States. So this may have a short term. Again, my thought is that it may not have a long term impact, but it may have a short term impact on that investor confidence, and you may see that there maybe a capital outflow. So you probably saw there was a sell-off yesterday. I believe it's probably gonna happen again going forward. The magnitude may vary day to day, but there may be a lot of volatility in the stock market as well. So I was talking about market volatility. So you already saw there was a sell-off in the market. You may see a lot of fluctuations, not only in stock prices, in exchange rates, in commodity prices. So all over the place, you may see a lot of volatility going forward. Impact on consumer borrowing, higher interest rates because of this downgrade can happen, may happen. So mortgages can become costly going forward. Your corporate debts can become costly going forward. So consumers are going to feel the pinch. So it's not very good, but they are going to feel the pinch. How much of an impact it will have, I will not, I don't know, but it will have some impact going forward. They are already feeling that pinch. So, hey, let's add a little bit more to this. Why not? Currency depreciation. So, because of this downgrade, US dollar may depreciate against other currencies. I don't know if other countries may devalue their currencies going forward. That may or may not happen, but that is one of the risks. Again, I talked about the risk of loss of reserve currency status, but I don't think that's gonna happen. Last one, in my opinion, a downgrade can prompt policymakers to implement austerity measures, fiscal tightening. That means that to restore the confidence in the economy and to reduce debt, there may have some short-term negative impact, like on the growth. Um, Employment may go down, so there may be some impacts of this downgrade. In fact, I was reading news that billionaire investor Bill Ackman, he is shorting treasury bills. So he says that yields could hit around 5.5%. And his thought is that inflation is going to stay at around 3% for a longer period of time rather than 2%. So that's his thoughts. What do you guys think? Let me know.